Hey folks, before we get into Dre's Take, I did want to mention that March 6th from 6:30 to 8:30, I'll be hosting a first-time home buyers class called Cocktails in Class with the Jennifer Smith team of Cross Country Mortgage. It's going to take place right here off of Hiawassee at Jennifer Smith's office in the Metro West area of Orlando, Florida. Make sure you RSVP. All the details are in the Eventbrite link in the description of this week's Dre's Take on YouTube. So make sure you RSVP. It is a free event. There will be some drinks and some food provided. So swing on down. If you're anything like me, you kind of want to know everything about everything before you jump into something. We're going to make sure that you get all the tools you need to succeed when it comes to home buying so that you understand the process from start to finish. Also, the pre-approval process, what's needed, what programs are available to you, what type of money's out there for you to become a homeowner. So you're not going to want to miss this. March 6th from 6:30 to 8:30 at the Jennifer Smith team of Cross Country Mortgage office off of Hiawassee, Metro West, Orlando, Florida. Make sure you RSVP. Seats will fill up fast, you guys. All right, now on to Dre's Take. Mortgage rates have dipped slightly over the past few weeks, but not enough to move the needle when it comes to buyers sitting on the fence. Is there anything ahead that we can foresee that may get the needle to actually move? Welcome to Dre's Take. This past week, the average mortgage rate dipped to about 6.8% or so, down from 6.87% the week before that, which was down from 6.89% or so from the previous week. These aren't very exciting changes, so it comes as no surprise that it hasn't done much to get buyers off the fence. Some economists do say that the lack of volatility is somewhat reassuring to buyers who are in the marketplace, however, as they can shop for homes and know that their rate isn't subject to incredible volatility between the time they get pre-approved to the time they find a home, go under contract, and lock their interest rate. As for the buyers that are still on the sidelines, it seems they're waiting from some magical catalyst that'll shift mortgage rates downward to some measurable degree that they feel comfortable jumping back into the game. But are there any such catalysts on the horizon, or even something we might be able to hang a loose hope on? Well, in light of recent economic activity, the Fed has definitely decided to be a bit more cautious when it comes to their Fed funds rate reductions. And it appears that they're unlikely to cut again at their next meeting. The notes from their last meeting did reveal something worth noting, however. They brought up the notion of stopping or at least slowing their current policy when it comes to mortgage-backed securities and bonds. You see, when the Fed is actively engaged in purchasing these instruments, it pushes the prices up and the yields down, which result in lower mortgage rates. This is what happened during the COVID recovery era when we saw mortgage rates drop to levels that none of us have ever seen before, and quite frankly, we'll probably never see again in our lifetime. In 2022, they shifted away from that policy and adopted what's called a runoff strategy, where instead of buying or selling these instruments, they would just allow those that they were holding to mature and then sit on the cash. Without the Fed actively in the market for these instruments, the prices dropped and the yields went up and the mortgage rates increased significantly and quickly. So if they did decide to begin reinvesting the proceeds from those instruments that are maturing on their books, then it could have some measurable or meaningful impact on mortgage rates. Now, since they wouldn't be increasing their purchasing, I wouldn't expect rates to plummet, but their modest re-entry into the market should have some meaningful impact. Maybe a handful of basis points, 0.25% or 0.5% in terms of mortgage rates. Whether or not this would be enough to really get buyers to start taking more action or not, we would have to find out, when that time comes. But at least it would be a step in the right direction. It's a very long shot at the moment, but the fact that they're even discussing it is certainly promising. Anyways, in the meantime, if there's anything I can do to help you with your real estate needs, feel free to reach out. I'm always happy to help. And until next week, that's Dre's Take. All right, y'all. Take care.